All right, what's going on, guys? So today is Thursday, August 10th. We went 50%. Let me pull up the trades from TradeZilla. We went 50% net P&L of $31. I'm not super happy with this day, I will say that. And to be completely honest, the last two trades weren't really necessary, and they were kind of one trade. And on top of that, I would say even Tesla wasn't ideal. And I'll get into that. I really could have and should have had a $134 green day. It should have been a one and done looking back. But I'll get into some of that here, and I'll talk about why. So it's a green day, but I'm not really, you can almost call it break even. But I'm not like super happy with it. So it is what it is. Let's just dive into it. Yeah, green, cool. The month chart, we just started scaling up, so these numbers are a bit, skewed. However, I will say it is a good sign, and it is good that, on a day where you go 50%, you come out green. If you're going 50% and you're coming out red, that's telling you that you're risking more than you're winning. So at least that's good. I know I can get that win rate up over time, but, also the law of averages, right? If that win rate is 50% over time, still going to be profitable, still going to make money, which I can't complain about. So let's get into it. First trade of the day was DIA. I was somewhat hesitant to take this trade just because, DIA is a little, I don't want to say sketch, but the spreads could be a bit larger, not as much volume on the contracts. But what do we got? Good volume today overall, and playing next week was the monthly expiration, so the spreads were actually tighter than I had seen in the past, and I went with the 355 strike calls. This way, by going with those, if you're playing 356, it's kind of a random number. Every 5, every 10, you're going to get more volume generally on those contracts. And so playing those, I felt okay. Why? I have this blue line here. I didn't actually trade based off that blue line, but that was a general guide on the 1 hour charts. So today, in general, I want to pull up SPY here in a second to show you what I'm talking about. And honestly, these videos are going to be good videos, I think, just as just overall market kind of thoughts about what's going on from, price action perspective. We had the Dow that has really pulled back barely compared to the S&P, the NASDAQ, the Russell. And so I'm like, the strength is here. If this can break above some of the recent highs, I like it. And so we got a 5-minute setup. Small consolidation. Really, it was about it was really two candles. And then that third candle was building. And so I ended up entering on this candle right here. I don't know exactly if I ended up getting right in on the break here of this double top, or if I got in on the break here. Either way, it doesn't really matter because the trade ended up working. And those contracts went 20 to 25% from this break. So probably closer to 30% if you got the absolute break of the double top high prior. Why? I mean, we have pressure on a prior level, prior resistance. We're above the upper strong, and we're breaking a double top high. That's it. That's momentum. Now, in a perfect world, would I want to see maybe 3 or 4 candles? Yeah. And then I'll show you Tesla in a second. You'll see what I mean, right? Yeah. But this works too, and I'll take that any day. If it's one candle, they'll call it a 3-bar play, where you get a pop, or a rip, a candle that does something like this, and then the next candle. That's kind of like your 3-bar play. You can call this a flag, if you will. They're great. I'm loving it if I'm in a trade already and it gets a 3-bar, but I'm not trading for the 3-bar. That's more of a scalp, if you ask me. Even though I'm on the 5-minute, it's more of a scalp because it can be, wrong or right quick. So I don't love playing those personally. So that's why it needs to be at least 2 candles for me to play it. So that was that. So it worked nice. And I took profits at 10%. And then the last piece I took off at 20. If we go back to this trade, let's see, I had 4 contracts at 245. I sold 3. So I sold 75% of it at around 10. And then I sold the last contract at around 20%. So that's how we did it on the DIA. I'll cover this bad boy right here, Tesla, and then the NVDA trades. These are kind of the same trades, and I'll explain why. They were a half size. It was tough to gauge off NVIDIA because it's very volatile. And so I couldn't find a contract that I liked that made sense, that would fit, my criteria, fit my risk reward properly. So I just kind of like played it twice, but with $500 ish each, or roughly speaking. Tesla, here's the loss of 110. This one kind of hurts because looking back, I probably shouldn't have been in this one. And this is kind of one of those examples of, I think, getting a little bit ahead of myself on it. Now, here's the reasoning. Here's the rationale. So we had this push up, pull back, nice higher low, pressure, push up. I'm like, yo, we break this high. That's like a textbook, long setup. So on the 5-minute chart, that's what I see. And I like it. Now, of course, the overall market ended up rejecting. So I don't want to say it's just Tesla's to blame here. The overall market ended up pretty much doing the same thing, where it was up early and then it came back hard, and it's dumping now. Well, I guess relatively speaking, it's still technically green on the day because it was up so much, but it's falling off. So when you look at this, I'm like, all right, we break out here, I'm in. Now, it was great because I knew pretty fast I'm wrong. So I ended up stopping out on this candle literally within 10 minutes right here as we broke some of these higher lows. Once those broke, I'm out. So it was pretty quick to tell me that I'm wrong. And I almost knew that once we broke it. I got in, and then I saw us come right back under the level. I'm like, don't love the looks, these early looks on it. So I was like, put the stop loss on, just make sure the stop is in. Just don't let this thing become a bigger loser, because it easily could be if you don't put a stop and you kind of use a mental stop. So I put the stop loss in at 10%, ended up filling me at 11%. Fine, not a big deal. But go to the 1 hour chart. Here's why I shouldn't have traded this one. This is looking back, me considering that I was green today, and then even after this, I was still technically green by like $20. Good, because this shouldn't have been traded, and it would pain me a lot more had I not, had I ended up red. It would, because I know that I shouldn't have been. But this is what I see. Like, this is kind of your consolidation. The reasoning why was you're up near here, that we get the breakout in the 5-minute, that sends you into a breakout on the 1 hour. That could be a really big move. And Tesla can make those moves. Like, it can. So if it was Apple, absolutely fucking not. If it's Microsoft, no fucking way. Google, no fucking way. Amazon, no fucking way. Tesla, even Meta, I would say no. Tesla and NVIDIA are my two, like, if it was Tesla or if it was NVIDIA, I'd consider it. That's why I looked at it. Because Tesla and NVIDIA can have like more of an individual personality that could be pretty insane or pretty strong relative to the market. That's kind of my deal on those. So that's why I took it. It didn't work. Why? Bigger picture. Let's frame the trade here. What are we looking for? Bigger picture. We are trending down, right? Yes, yes, this is a break of prior resistance, so it could provide something, sure. But in a perfect world, like, let's just relax, and especially given what we've had the past couple of weeks, we know the market's not perfectly aligning with our strategy right now. It's not like every breakout's sending it. We can still make money, but it's not like easy money. So let's look for something better. Whereas we get up towards some of these highs, okay, that would be breaking this downtrend. We technically are still in the downtrend, so you're playing against the trend. That's why. But 5-minute chart, look great. So, and I was like, yo, CPI this morning, if the market's about to send it, we got momentum behind it, this could be good. So it made sense. Like, chart looked good, it broke, and, just didn't work. Then we came over to NVIDIA and we played NVIDIA. This honestly was it should have been a great trade. It was a great trade had I played it, just simply put. Let's go back to the timing on the NVIDIA trade. I forget exactly what the timing was. 10:03 a.m. I believe that was the entry point. Yeah, 10:03 a.m. on the entry on NVIDIA, which puts me, and that's Central Time. That is this right here. So yeah, so I played this, essentially the breakdown underneath this consolidation. Now, this one honestly is not the best of trades. Why? On the 5-minute, man, you're just kind of in the middle. You know, you're not near lows necessarily, or you're not really near highs. You're like smack dab in the middle. So did we get a downside opportunity? Did it set up for a flag, kind of, if you will, or consolidation? Move down, consolidate, underview up, momentum to the downside? Yes. But did it provide the momentum that I was looking for? Not really, because it gave us a little push, then it snapped back. Push, snap back, bigger push. I should have said, fuck it, I'm out here. But I didn't. I let it come back and end up stopping me out. And then I re-entered because the stop loss was just a wick, only for us to then get stopped again. So essentially, they're the same trade. One of them made fucking whatever, $50, 45, and the other one, what did the other one do? The other one lost 38, essentially a break even. Essentially a break even. I just couldn't find contracts quick enough for when I saw the trade opportunity for me to be able to kind of go like, oh yeah, that's perfect based off my position sizing. So it is what it is. Technically it's 4 trades, but really it's 3 based off the sizing. So you could call it a plus 0.25 R day. When 1 R for me is about $100. That's like my standard risk on a trade. So we had a plus 1.25 R win on DIA, about a minus 1 R on Tesla, and then you can call it a break even, a 0 R elsewhere. So we finished today plus 0.25. Not bad, not great. Here is the week, just for full transparency. We are currently on the week down 303. Not bad, but if you go back over this week, we're still at a 33% win rate. So am I supposed to be green on that? No, based off my strategy. We get 50% or better and we're green, guaranteed. Look at the average win loss. So that's what I'm focused on. I don't really care too much about it in that regard. I'm not worried. It's probably going to be a red week. I don't think. It's possible the system can make $300 in a day. It could. I don't think that it's a likely scenario. It's more likely that we'll be somewhere between negative 200 and positive 200 tomorrow. But we'll see. You never know. So this is probably going to be another red week, but not bad, I will say. We broke the loss streak. We got to be a little bit more, precise on this stuff, and I think and stick to the strategy, to a T a little bit better. And we'll be fine. Just that Tesla trade just pisses me off because I didn't need to take it, and I probably shouldn't have taken it. But at the same time, if this works, then the 5-minute chart signaled it, and it could be really big, right? So that's the deal. But here's why the market. So here's why I'm here. Here's the overall thoughts of the market. It's pretty freaking wonky, to be honest. Look at what we've got. So coming out green on any of these days in this just consolidation chop, if you will. No directional movements. It's not a bad thing. So I can't get, you got to take it with a grain of salt. But looks like a big doji today. It's still it's like midday. So who knows? This could close down here. It could close up here for all we know. I don't want to get too caught up in that stuff. But if you go to the 1-hour chart with the CPI this morning, right, the market reacts in a positive way. Inflation came in like slightly lower than expected, I guess, or whatever, or at least the headline CPI by like a tenth. Not a big deal. We're just like in this like kind of range bound chop, slight downtrend to it, but today kind of broke the lower highs. So it's like, it's not clear. Tomorrow's PPI, maybe get some better action there and better looks. But it's not super clear. So that's my only thoughts on it right now as we speak. And hopefully this video was helpful. I'll leave links to TradingView, which is this charting platform, in the description box like usual. But hopefully you like these videos. If you do, I'm probably going to keep making them. They're just, honestly, like I kind of forget that I'm even making a video. I'm just talking out loud to myself, which is what the point of this is. And essentially taking this, putting it into a video format so I can kind of fall back on these and come back to them and see mistakes and all that stuff over time. So far, August is off to not a great start. We go back to the overall P&L on the month. But here's what I look at this, though, and say, okay, I'm down about 6R. 6R is what I'm kind of down right now on the month. That's 6 winning trades in a row. Obviously, that would be a pretty big win rate or pretty big win streak. But you have a day where you go plus 2R. You have a day where you go plus 1.25. You have a day where you go minus 0.5. I don't know. With good risk reward, good risk management, and now all of a sudden you can see that can get whittled away. So we still got about 3 weeks to go in the month. So a lot could change. And as long as we stick to the risk reward, this is also semi-skewed because I didn't size up on these 2 days, the 1st and the 2nd of August. If I had been playing with the same sizing, those days would probably be more like $200 or so, at least $150 or maybe $200 green days versus $100, because those were actually really good green days. So, would have been technically less, but no, whatever. That said, thanks so much for watching. That's today's trade review, and I'll see you in the next one. Peace.